I think a number of organisations are offering online continuing professional development as the face-to-face offering has all but disappeared. And there's certainly some very interesting information out there, and looking at perhaps markets that have been more impacted than we have with coronavirus in Europe and the USA. It's actually really interesting to see the sort of trickle-down effects, even on future design of residential property. And they may be lessons that we learn as well.
Yeah, indeed. All right, well, we'll look at doing that, and we'll let you know when that's coming out. We'll try and put something together for you in the next week or so. How about clearance rates ticking up just a little bit. Let's have a look at the final clearance results from the last week, showing a weighted average nationally of 59.9%, almost 60%. Just missed it.
Yeah, it was a close shave. Obviously, looking at those results, you can see that the number of auctions was well down, as we expect. Because at the point of listing these properties, there would have been quite strict coronavirus restrictions. But in particular, if we look at Sydney, you can see they've got the highest clearance rate of any capital city. And certainly anecdotally, we were hearing about auctions that were perhaps listed for an online auction during the course of the week, but actually were then converted to a Saturday auction, which was able to be held with, on site with people in attendance, and the clearance rate obviously higher than for any of the other capital cities.
Yeah, we're still seeing sellers preferring to do pre-auction sales. This is pre-auction numbers, and also withdrawals are starting to pull back. With all these are signs of more consumer confidence about the market moving forward, Kevin.
Yeah, look, and it's also a bit of vendor confidence, because the fact that vendors are actually less inclined to accept an offer prior to auction and actually take it to a face-to-face auction, which was possible in New South Wales weekend just gone, and will be possible in South Australia and WA next weekend. It does show that there's some confidence in auction as a method of sale. As we've spoken in the past, a face-to-face auction, on-site auction, does generate a little bit more emotion and energy. And it's a restricted buyer cohort that is sufficiently confident in their financial situation to bid. But nonetheless, it does seem to be yielding results for the right properties.
We're going to show you the numbers in the week ahead towards the end of the show, which once again, I think we're going to bear in mind is a reflection of the fact that the listings that are coming on now, and we'll show you those figures too, won't be reflected in the figures we give you here for about another maybe 2, 3 or even 4 weeks. They'll be listed coming up. We'll give you those numbers towards the end of the show. Kevin, I want to progress, if I may, and just have a look at a couple of other stats that might tell us where the market's headed. The first one from CoreLogic is the number of homes for sale in the combined capital cities. We see a slight, well, there's been a decline, but when you look at it over the last, maybe 8, 9 years, it's not very dramatic, in my view. Am I right or wrong?
Yeah, look, I think we did see quite a dramatic drop in new listings. And so we saw about a 40% drop or more in new listings. And that's, given the time frame that we're dealing with, and it is only at this stage a couple of months, those deferrals are only, maybe they're short-term deferrals, but there was a base level of property already on the market. And a lot of that property hasn't been withdrawn from the market. And if you have a look at the graph there, you can see just right at the very end of that, you can see that there's just a little bit of a flattening of that sort of drop. So there was a very immediate reaction to some quite dramatic restrictions put in place, but that drop has sort of looking as if it's sort of reaching the end. And people are looking perhaps towards the end of the coronavirus crisis and looking at whether they can perhaps get their properties on the market.
Yeah, one other point that we should remember here too, or I should remember, is that this is total listings on the market. And as we, I think, said in last week's show, the number of listings 90 days plus is actually growing, which really means that properties simply aren't transacting. And that's what we're seeing here, that the number of listings not necessarily falling. So it's going to be interesting to see if that flat line continues in the weeks ahead, Kevin.
Yeah, look, and one of the indicators that we do have is the use of our data in platforms used by real estate agents. And there's certainly an indication that there is increased activity in doing property research using our property data. So again, that fall was quite dramatic with the restrictions, but we've started to see the data being used more now. And that's a precursor to real estate agents making a listing.
Indeed. I caught up with Tim Lawless during the week, and we talked about that too. That's coming up in Real Estate Talk. That'll be tomorrow. I want to move to our next graph, which is another interesting indicator about what's happening in the market, and this is days on market from the point of listing to the point of sale. Some pretty big numbers there. We're looking at houses and units. But you've got to look at I suppose Perth's not really a surprise, but I was a bit surprised about the days on market in Brisbane.
Yeah, look, I think it is interesting. Brisbane, in fact, across all markets, they have crept up a little bit because of the coronavirus situation. But I think it's important to note that, in all of these markets, there were transactions which were, if you like, in train at the time that the restrictions came in. So there's been a base level of transactions that have continued because they were committed to before the restrictions. We've seen in a number of the capital cities edging up the number of days, but it's been an edging up. It hasn't been a really significant increase. Certainly, Brisbane is perhaps higher than you might expect, but I mean that is from a level where it was probably just a little bit above the days on market for Adelaide. So the increase again, there has been an increase, but it hasn't been a dramatic increase from the previous position.
Next graphic tells another story too, maybe a continuation of this, but by contrast, if you were continuing our discussion about Brisbane there and the days on market, interesting to note that Brisbane actually has one of the lowest vendor discounting, and vendor discounting here is the amount of money from asking to final sale price, and we're looking here at houses, say in Brisbane, of 2.8%, one of the lowest in the country.
Yeah, look, that's right. And whilst we've seen a little bit of an increase in vendor discounting, as we've discussed before, the current downturn in the number of transactions hasn't yet manifested in very significant price reductions. And that's largely due to a vendor having the perception that this coronavirus situation won't last forever. So unless they feel compelled to sell, they probably will simply choose not to transact rather than accept a lower price. You can see there's quite a big difference in Brisbane between, vendor discount for units and houses. And again, we've discussed in the past the fact that there's a very significant supply of units in Brisbane, and a lot of it really quite concentrated in sort of unit development pockets, and that has led to a bit of an increase in supply compared to demand, and therefore the vendor discounting is just that little bit higher.
Staying with this slide just for a moment, I've got to talk about just how robust that Canberra market is. I did a webinar during the week with a whole bunch of real estate agents in Canberra, and it was just amazing how strong that market is. But I think, as you pointed out in the past, Kevin, it's really built on the fact that employment's very stable. They're not as exposed to some of the employment areas that have been impacted by coronavirus, like hospitality and food.
Yeah, that's right. There's a very stable employment base related to governance and the public sector, and obviously that has probably been less affected than as you mentioned. I mean, hospitality, travel are the really badly impacted areas.
Okay, well, we'll go to our final slide, which is a look at what's happening with auction activity in the week ahead. Let's have a look at that. Sydney 167, Melbourne 110, Brisbane 28, Adelaide 15, Perth 8 and Canberra 37. We should once again just mention the fact that the listing numbers will no doubt grow now that we're back in a lot of markets to on-site auctions again. But interesting to make the comparison with last week, we can see that there was a continuation of the fall off in numbers, Kevin.
Yeah, that's right. So, I mean, basically, when these properties were listed for auction this week, we were sort of 10 days into the significant restrictions around coronavirus. So, clearly the majority market view was to postpone any listing for auction. So a few brave folk went ahead and listed their properties, and I would imagine in those markets where there are sufficient people who feel financially secure, we'll probably see some higher clearance rates again.
Indeed. Well, Kevin, as always, great to be talking to you. Just a quick reflection back on the final auction clearance rates. We'll bring that slide up again. Sydney 66.3%, Melbourne 56.5%, Brisbane 47.6%, Adelaide 51.9%, and Canberra 56.1%, returning a weighted average nationally of 59.9%. Kevin, I look forward to catching up with you on Monday. We'll have a look at the first rush of numbers out of the week, and also I'll look inside some of the top sales. Kevin Brogan from CoreLogic every Friday, every Monday, with auction update right here. Kevin, thanks very much for your time.
No problem at all, Kevin. Speak to you soon.